What's happening, people? It's the Nomadic Trader here from Phoenix Trading Academy. Welcome to another video. In this episode, what I'm going to do is I'm going to show you something that was only taught when I was coming up in paid mentorship. Not the original very first trading course that I did, but along the way, I actually did a course with Infinite Prosperity, who no longer trade, but I think their legacy does continue to live on. And there are still sort of doubts and questions as to whether they were simply course sellers and sort of dream pushers like the majority of the online gurus, or if they were in fact changing people's lives. And part of the most premium, platinum, advanced tuition that you can actually get and work towards, which I was actually part of at the time, one of the key components that they shared, which again, I stress for, this was a heavily guarded secret within the industry, I'm going to share with you today, as well as reviewing the potential of using that information and including that in with what ICT teaches, not only to trade the fair value gaps on the micro time frames, but also to use that to look at reaching for further profit objectives, and also including the higher time frame bias, and also the different PD arrays above and below the market, depending on obviously which direction that we're actually looking at. So without further ado, we have already covered the fact that we were rejecting this area here due to the monthly time frame order block, which is looking left. And we've also got these relative equal lows here on the weekly time frame that were just tapped before we actually saw the market come up here. And what we've done is this down candle here forms part of this order block, but the last down candle in this situation actually gave you your bullish order block. And then just for clarity's sake, we'll actually draw that out in time. This will actually give you your mean threshold for the middle of the candle, basically, and we're actually using the bodies of the candles with this order block. And then if you think back a couple of weeks ago, we'd actually got these relative equal lows here, and we were already showing this tweezer bottom type formation, which is a retail candlestick formation. And then what we did is we actually took the sell side liquidity, and then we knew upon closing back high above the range that we were due to expect some form of expansion into all of this displacement here and this imbalance. ICT did actually then go on, after I'd published the video on the Sunday before, he went on to share that, and he also explained that he'd reserved that information for his paid students. I'm not a paid student. I'm not part of his 12-month mentorship program. What I am part of is the 2022 online YouTube mentorship program, and also everything else that he's got in his library as well. I've really gone through extensively, and I've also got a lot of experience across the trading styles as well. So without waffling on too much, the concept that I wanted to share with you, and I'll share it nice and early in the video rather than keeping you hanging on, is a form or an expression which goes, the trend is a run and a run is a trend. And what that means is within a run on a higher time frame, and in this example that I'm going to share with you now, that's actually a weekly run. So you should already know the difference between a run and a trend, as well as like an impulsive move and a retracement. If that isn't clear, please let me know in the comments and I'll be happy to explain it in a bit more detail, but I don't want to cover this video in too much depth with the more basic principles. So a run is a trend and a trend is a run. What does that actually mean? So as you can see here, when the sell side liquidity was taken on this bearish candle here, we were due to expect some higher prices, and that was already covered in quite a few of my other videos. But what I wanted to do is I wanted to analyze these few weeks of price action here, because this here is just a nice simple run on the weekly time frame. So if the weekly time frame is the higher time frame, the subordinate time frame, the time frame below, would be the daily time frame. So if I go down to the daily time frame, now you can see that we've got more information here, more data, more price action. And this is in the form of a nice simple trend. So we have higher high, higher low, higher high, higher low, higher high, and at the moment we're forming a higher low. So this is standard retail stuff. This is all in the textbooks, all on baby pips and all that the paid gurus, quote unquote, share with you. But what I wanted to do is I wanted to share the significance with you. So if I go back up to the weekly time frame, after this candle here, we'd be using what ICT teaches to look for buy-side liquidity within this range here. So from this high to this low on the weekly time frame, this is your equilibrium price, and then anything above this is going to be a premium. So we can expect higher objectives on the weekly time frame. And if you go into this run here from the weekly back down to the daily time frame, you can see the nice ebb and flow. So what you're looking at doing is you need to include what ICT teaches on the 15-minute time frame, where you've actually got a sweep of the lows here and also the imbalance in price, which is the fair value gap. So for clarity, I will turn that into a white box and I'll say weekly run. And I'll say on the right at the top. There we go, nice and clear. So we've actually got this daily fair value gap here. So we've got all of this sell side liquidity that's building up here. We've actually got this here, which is at the top end of this gap here. But also if you go down to, if you go up to the weekly time frame, we've actually got this down candle here. So this is a bullish order block. So that's weekly bullish order block. And then back to the weekly time frame. So not only is this an old high, this is part of a rejection block, but to be pinpoint accurate, we've actually got this in price. So this is just here tapping into the mean threshold of this fair value gap, 50% mark of the overall fair value gap, which takes you into the weekly order block, which takes you into a discount price in this dealing range here. So what I'd actually outlined in one of my previous videos was I'd like to see price come back down, reject this level, and then I would be considering taking a long position further up into some of this objective here. And just for bragging rights, I have actually declared this each and every time when I've done a market review on a Sunday before ICT has actually released that information. And I'll be honest, I'm really pleased with that. I'm really proud that I'm learning what he's teaching, I'm putting it into practice, and I'm calling predictions in the marketplace, and they are actually coming into fruition. So I just need to recognize that, you know what, given enough time, enough study, enough patience, and enough back testing, you can completely either learn it from fresh, or like me, that had 6 years of experience with all the retail garbage, I had to completely forget all of that. So it does go to show that with enough dedication, these things will come together. So back to the topic here. So we've actually got a rundown during news on this day. And if we've actually got a shift in market structure to the upside with a fair value gap, we've now got the daily higher time frame set up of what ICT teaches for the 15-minute time frame. And I'll reference some of the topic as well that was included in my 1 hour time frame video, and also the psychology of a retail trader, which is in the same playlist as this video, so you can find that. So we'd actually got this low here, we'd actually got this imbalance here, and we've got all that other confluence that I'd pointed out. Just going to delete this here, which was from the previous fair value gap, sorry, from the previous order block. And then this here, we've done the weekly, we're expecting a weekly run, and that is literally going to be a couple of weeks expansion to the upside. And obviously at the time of the prediction, we don't know how long that's going to take. It could be one massive range candle, it could be a few weekly candles. So we're expecting the range expansion on the weekly time frame to offer that bullish run. We go down to the 1 hour time frame, we've had a shift or a break in market structure, the fair value gap, it creates that order block, which is a high probability order block because it has the fair value gap. And then what we've done is we've come back down here. This now is inducing people to go short. So on a 1 hour time frame, this would have been observed as a reversal. And I did actually call that this was a shorting opportunity down to this area, which worked out to the T. And if we go into this price action here, so this was actually in the afternoon session. So from the 1 hour time frame, we've got all of this key level drawn on automatically, so we don't get suckered into the market here. We don't get suckered into the market here or here, where we've got this shift in market structure, because we are actually moving away from this key level. And then if we go down to the 15-minute time frame, we've actually got a run down almost into it. We've come back down to rebalance some of this. We've gone short again. Now that has given you your bread and butter shift in market structure there. Okay, that's clear to see, isn't it? So you've got this here, and then we've gone deeper. We've come back up, and anybody that was lucky enough to get long here, we've come back down in the PM session to take their liquidity. Okay, so the original move would have been in the afternoon, 3 p.m., and that's Eastern Standard Time, New York. So we've actually had the liquidity swept on the 15-minute time frame. That is the setup that he teaches in the YouTube channel. So then from the 15-minute time frame, we go down to the 5-minute. I don't want to leave this. Okay, and then can we observe a displacement with a fair value gap? So yes, we can. So here is your displacement here with a shifted market structure. However, that doesn't look very clean. So I'm going to go down to the 3-minute time frame. Okay, so you can clearly see that this is a much nicer shift on this time frame. So if I clean this up, we've actually got a fractal in the market going all the way down from the higher time frame, and that is another buy fair value gap here. So this is your shifted market structure. There's your short-term high, there's your displacement, the elephant's getting into the pool. We've got another a smaller time frame set up here. So you can see that this here is a fractal of this here. So sorry, this here is a fractal of this here. So we've had all this going on, and then we'd have actually coupled this and these setups here with the high impact news. And I encourage you to go back and back test this, the 26th of July, 4 p.m. as well as 3 p.m. and have a look at the news announcements, and you'll see that the manipulation is clearly there in the market, as you can tell from these candles. So what I want to do is put on a long position, which would have been from that candle there, which would have been the entry, trade back into that fair value gap, okay, to there, and then I'm going to go up to the 1 hour time frame. Now, if you're looking at trading the day trade, then obviously you're looking at trading within this range here. So that still would have given you, if you're trading the daily as the higher time frame, that would actually still given you 15%, 15.5% reward. But if you're looking at holding that on a partial all the way up to the top there, you've got more than 41% reward potential to see out the rest of that daily range. So what I'm going to do is I'm just going to take a screenshot of that. There we go. And then I'm going to clear this off. So when we are looking at the 1 hour time frame, we've got this sell side liquidity here for this low, which actually then taps down into all of the other confluence, and then the market takes off higher. Because we have that higher time frame objective, the importance that I can't stress enough is if you are clear with your higher time frame bias and the narrative still fits, you need not get scared when the 1 hour time frame turns, providing that you are trading within the framework of the higher time frame scope. And what I mean by that is, because we're trading in this example that high time frame objective, we're only entering into the market in a place which fits the model of the framework on the higher time frame. Which sounds a little bit confusing, but what I mean is you wouldn't be looking at entering here, for example, with your stop loss here, expecting higher objectives, because we know that we haven't, at this point, we've not actually come back down into that daily fair value gap. So what you need to do, and you need to go back and back test this, is you need to follow the daily time frame around with the context of what the weekly is doing. And by that, what I mean is, if you've got all of this imbalance here, and obviously we've all been following this is well documented, and then you've got your mean threshold, which is about there, excuse me. So these were the objectives near the top, and then obviously we've got this, and then we've actually got all of this above here. So if we want higher prices, we've got this here, and then after that up here, and we've got this imbalance. So what you need to do is you need to have these levels drawn on, yeah? In fact, you would have that like this. There you go. So what you're doing is you're basically following the daily time frame around. You're using the timing on the 1 hour time frame in line with the daily narrative or bias, and you're trading the daily run for your with institutional order flow on your side. And overall, if you can anticipate what that weekly run and expansion is going to be, as I've shared in this example, that's going to give you the momentum on your side, and also the confidence over time, the confidence to hold longer term objectives. Now, you might not want to hold the whole position or even half of the position. You might simply want to hold like a tenth of the position. But I tell you what, if you get in here on a 3-minute time frame timed entry, I can tell you now, if you're holding even 10% of that for the entire run here, you'll soon see that add up. So you'll be paying yourself constantly, and you'll be trading the model as is taught, but hopefully now this will give you some insight into using that higher time frame bias and objective to frame the lower time frames. And to just summarize, each day when you go into the market, if you're trading intraday, you need to trade in line with a daily trend, and that will give you your momentum. However, your daily directional prediction, which is another infinite prosperity term, the DDP could change from day to day. So where we've actually come up here and we've met this buy side objective, we can now expect some form of a retracement. So just because we know that this is now expanded to the upside and we do high prices, it doesn't mean that you can't take a reduced risk trade down here as you start to become more clear with these concepts, and also your confidence and your experience starts to grow. So that brings us to an end of that topic. A bit of a review for the week that's just passed. I did no trading whatsoever, and I'll be honest, I've been incredibly busy. I'm just launching a separate channel, and it's called The Nomadic Trader. I've included the link in the description below, but I've decided that now is the time that I'm going to really work towards becoming a full-time trader. Because at the moment I still work a 9 to 5 job, which is 5 days a week, and I just can't do it anymore. So I've moved into my car, which I've turned into a micro camper, which is on my other channel. I'm just starting that now. So the channel is actually going to be focused around sharing insights into motivation, keys to success, my experience over the years with dealing with mental health issues, and lots of other interesting feature topics. But the adventure is going to be the fact that I'm now living full time in my car whilst I'm working a 9 to 5 job until the end of the year. And at that part in that journey, my journey, what I'm going to be doing is I'm going to either go part-time to just a Friday, Saturday and a Sunday somewhere, just a normal casual job, or I'm going to use my savings to finance an unemployed 12-month period of where I'm going to double down on my efforts, and I'm going to get funded, and I'm then going to be trading full-time. So if that sounds interesting to you, please click the link in the description, go to my other channel, and it's called The Nomadic Trader. There's a few videos on there already, but I will be creating some really engaging content, and I'd look forward to having you on the journey with me. Okay then, well, thanks for listening, and any comments or feedback, please put it in the in the comments below. Thank you.